This is Bambi, and I'm here with Don Dodge, who's part of the emerging business team over at Microsoft, and we're here at the Always On Conference Venture Summit East in Boston. Hey, Don.
Hi.
So, Don, you're on this panel called What Do Corporate Buyers Want? So, first question, is Microsoft buying?
Yes, we buy about 20 companies a year. Last year we bought 15, so down a little from normal. We just purchased a gaming company 2 weeks ago.
Really?
So we're still buying, but they're small deals.
What's a small deal? We were just talking to Giles Napney, who said that small deals aren't happening, $2 to $5 million deals aren't happening. But are those the type of deals you're doing?
Well, a typical deal for us is $30 to $40 million in that range, so that's a small deal. But we do all kinds of deals. We do billion-dollar deals and we do small deals.
Okay, who's the gaming company?
It's called Game Park, I believe. It was just announced 10 days ago. It's a very small company.
What else is Microsoft looking for?
Well, we buy everything. So if it's software, we're interested. They can be small companies from 10 to 20 million up to $1 billion. They can be companies that are 2 to 3 years old or 15 years old. They can be in the U.S. or Europe or Asia. So we're really looking for companies that are doing something great on the Microsoft platform, filling in gaps, filling in holes, leveraging what we're doing, creating new markets, that kind of thing. So it's a pretty broad spectrum of companies.
Okay. So you're on that panel. So what do you think what do you want the audience to take away from that panel?
Well, deals are still happening, but I think valuations are a difficult thing. You know, the public markets are down 40 to 50%, the real estate market's down 50 to 60%, and private companies haven't internalized the value of their companies has come down 40 or 50% too. So you have this sort of self-selection where the really great private companies don't want to sell yet because they know their value is down, so they're going to tough it out and wait a year or two and get a higher valuation. The companies that are not doing so well, they know their valuation is down, but they really aren't worth buying. So we're in sort of a standstill where the great companies know their valuation is too low and they're not going to sell.
Right.
The marginal companies aren't worth buying. So it's tough to find a good deal.
It's tough to find a good deal in this market, huh?
Yes.
How many deals has Microsoft done, and how many more do you expect Microsoft to do this year?
Well, like I said, we do typically 20 companies a year. We did 15 last year, but we've only done one so far this year.
Whoa, so you had a lot of catching up to do.
Well, yes. I mean, we don't hold ourselves to a metric that says we have to buy 20 companies. We look for opportunities. We're still looking. We're still evaluating. We just haven't found the right company to buy.
And how do you see the environment changing in the next 6 months?
I think we're going to go sideways for a while. It takes a while for companies to understand that valuations have come down, and so the buyers and sellers, there always has to be a meeting of the minds when you do a deal. And there's just not a good meeting of the minds on valuations and future prospects and that kind of thing. But deals will get done, and we're aggressively looking. It just takes time.
Okay. Thanks, Don.